Well, good evening, all. I'm Epstein, and here we are with your metal market wrap-up, and your wrap-up is for Monday evening. And we're sitting here at the 21st of April, 2025, about 6:17 p.m., and that is Central Time. So as we look at the markets, the stock market down a bit, but we have been falling so much that the pace of the break will eventually just on its own slow down. That's something that you have to start looking for. Don't know when it will set in, but it will. Seen these things before in my career. In the gold market, the buyers just keep showing up and driving everything higher. At first, you try to rally in the metals, and then as the day goes on, they give up a little bit because gold is gold. It's the storage of value, and banks are dumping the dollar. They don't want that, or they don't want to buy the dollar, offering support to it in favor of buying more gold, and they're putting that away at this point in time. Those are the things you have to consider. When we look at the bonds in the note market right now, where they're a little bit of everywhere, and that's just the simple reality of the situation. The shorter term, and first we'll start with the long term. The long term tonight, the bonds are getting a little bit of a bid, and you're down just a fraction right here in the 10-year, and the 5 and the 2 have been what markets actually getting more of the bids on. So, early on, you can go either which way. We saw today, as you saw me say, the dollar crash down 100 points, and that kicked up the euro into the 115 plus area. So this is the first time the market has got up to that 115 area and held it. It stuck its head there before, but it's always backed off a little bit. Energy markets broke down pretty hard today, so you're getting an early evening bounce. Tomorrow, here's what you're going to get in the way of data. You're going to get the Red Book Group coming out with their weekly U.S. retail sales data. That's at 7:55. We're going to get the IMF's World Economic Outlook. It can't be pretty. It's got to be on the ugly side. The Richmond Fed's going to update their monthly manufacturing sector index for April, and that'll come out at 9. The South Korean delegation arrives for trade talks with Trump tomorrow. We've already seen Japan in. So the question is who can do what and who's going to be the first to make a deal. And in reality, that's part of what the market psychology is about. I did a special report update today on the dollar index. The last time I did my report on the dollar was February 19th, and I gave a number in that report that if you took it out to the downside, you could start tumbling. I went back and I reviewed the report, so I know what I said, and I have it. And I was watching the video, and that absolutely ended it. We'll talk about that and everything else at the end of this report, all right? So let's go take a look at the gold. The gold's in a runaway mode, all right? Higher and higher. Now, you have to understand, when you buy rallies that go vertical like this, and they are vertical, you're up already 3.5% for the week, just going into the first full day of trading. And what are we now, 2 hours? Actually, an hour and 15 minutes into the second day. You can get 3 to 5% breaks, 8% breaks in one day. Be ready for it, but also that's probably the breaks that you want to buy in this market. Here's the rise that you've had, and you went vertical from this point, roughly the 3,200 level, and the market's just shot to the upside, and it's rather dramatic. What you don't want to see is the market take out 3208.70, the last break low. The moving averages are going to move up to attack that over the next 48 hours. It's not there right now. That's 3183.80, but think of where that's at. You'd have to fall in this market 200 and some odd dollars, big amount, in order to get down to that number. I'm not looking for that to happen. In other words, for something like that to happen, could it happen? Let's talk about that. Yes. You can't say no that it can't happen. It's a possibility. How fast? Couldn't even tell you. What would do it? Trump reverts to something on the trade tariffs where the game changes. Maybe he makes a deal. Maybe he says, I've gone too far. I don't see him doing that, do you? So making a deal out of left field would surprise the market and show that he can make a deal on this and they can get done. When he does that, yes, you've got to look at what the deal is, but I don't think it'll be bullish for the gold market. That is the negative that I'm expecting how the market would react on it. When we look at Bollinger Bands, you keep running them. This is the bullish part of that. In other words, you've heard me use the term here, the gorilla glue trade, off that famous glue. Well, the reason that I use it is the market, as you can see, just keeps sticking to that and throwing the market higher. The bears that are saying, oh, I'm going to cover my short, they're not able to do so. Do I think there's a lot of new money rushing in? I don't think there's as much as you think. I was watching today on CNBC, one of the big funds come out and talk about how much money they're seeing come in, and they said it has slowed. The problem is nobody's selling. So anytime you're getting the money in, you got to go chase the market. There's fewer sellers in the market at this point. You can also see that you're taking the slow stochastics and trying to get them to embed. To do that, you cannot include today because we don't know where Tuesday is going to finish up. But we have Monday, both numbers are over the 80 level. We can go to Thursday and both numbers were over the 80 level. And Wednesday, obviously we had Good Friday, so that's not there. So when I look at how this is all playing out right now, if you stay like this, the breaks happen this week. That's where I think the buyers step in on the pullbacks, especially if you have the embedded reading. In the gold silver, look at how you keep moving out. Remember, I showed you this recently. I had the chart narrowed in. Maybe I'll do it a little later this week. 122 has been where the market has historically been up to and run into problems. Now, that's the highest it's been. So this was also a resistance area, and it's not really stopping the market from doing anything. Silver is laboring, and I want to make that clear, laboring to stay over the 18-day average and these other averages. It took 1, 2, 3, 4, 5, 6, 7 days to clear itself almost of all these. And now as it pulls back, there'll be some support. What I don't think the pros will want to see is the market take out the low that I'm pointing to. And if I can get it, yeah, it'll do it right here. The number is 3242. Now, it sounds like, oh, that's right here. It isn't. 3242 is 60 cents away. So don't get the impression that's right here. So I'm looking for the trade to try to support the market in the 3265 area, and I don't want to see it under that number. If it is, you go back into the mix back and forth in there. In the copper market, you've labored to get up to this 18-day average. I would not be surprised to see the market try to slip back under it immediately. The trend is no longer down, but it's also up at this point. If it can stay over the 18-day average, it's got to prove itself tomorrow. Remember, you get these Tuesday ups, you get reversals. You get a big Tuesday down like in the stock market, you often try to get a big Monday down, you try to get a Tuesday reversal to the upside. And by the way, in the platinum market, same thing. You've worked really hard to come all the way up and you ran into the brick wall at these moving averages. That's what I'm saying. Difficulty. Silver, platinum, and copper are not gold. Gold has got its own thing going for it. All the rest have industrial purposes, and that's problematic right now. And in the dollar, well, this just keeps supporting the gold. This is, again, the gorilla glue trade that we talk about, where it latches on, gets under the Bollinger Band, then moves to the right-hand side, but doesn't leave it. It's either side of it, and it's just pushing the market down, and we'll see if this eventually embeds. As I said, I did the special report for you today on the dollar index. So in it, you're going to be able to see where the market's been, and I used the June, so you're able to get there and see what it's doing. I cover it with the price count, and I give you what the next price count is. I'm not going to share it here. I want you to see the report. I didn't even do seasonals. I moved them off because seasonals aren't working. This is a Trump-inspired event. This has nothing to do with weak seasonality, the norms in the market. This is a man-made event by our president that said if he won the presidential campaign, he wanted to drive the value of the dollar down. He wanted to break energy prices. He wanted to get interest rates down. He wanted fair trade in America. How many of those has he succeeded on? I discuss it and I give him a gold star or a blue star, I guess you might call it. That's how I did it in this one. and you'll see on how many. In the meantime, just go to iraepstein.com, iraepstein.com. We'll get that up here one of these days. I'll put up a link right up here so you can click it. And on the top left in the website, you'll see it right there. Give it a click, and away you go. I'm Ira. Have a great evening.